Welcome to Retirement Key Radio with Abe Abish.
You know, Abe, I'm getting a little worn out with some of the messaging we're getting from the financial talking heads. I mean, we hear it over and over again. Even though the markets have been doing well, the overall economy is still struggling. You and I have broken it down a little simpler than that by saying that Main Street and Wall Street don't match.
Right,
But
exactly.
not everybody agrees with that. Wall Street veteran Jeff Sout told CNBC,
the economy is doing a lot better than most of the economists think. So I think the markets are going up. I think they're going up a lot more than people think. We may stall here for a while into September, October, November, but I think you're going to get a rocket ship coming in the fall of this year, and I think the S&P is going to trade out above 4,000.
I gotta laugh. I think that guy's in his own bubble there, Kristen.
well, I like your
Honestly.
reaction out the gate because
Honestly.
that's the thing. We don't know. Are we headed for another record high? I mean, maybe, but it doesn't feel that way. Should we start paying attention to the amount of risk in our portfolios a little bit closer? It sounds like, according to your laugh, that's the way to go.
We couldn't disagree more. We don't have that type of outlook through the rest of this year. We still think there's a good bit of stuff we've got to get through, and we do believe that Main Street is not matching up with Wall Street, and that's a classic example of some guy that's kind of just stuck in the Wall Street mode and not really seeing what's going on, we believe. So we believe there's going to be a slugfest we got to get through here. I mean, there's just a whole bunch of stuff happening in this country right now and a lot of uncertainty. You know, states are starting to close up again, or parts of states. You know, I just saw California is closing up, indoor restaurants again. So there's just a lot of uncertainty. We've got to get through this, and there's no way that the market can totally rebound until this coronavirus is over. And then you throw in an election, you throw in almost $27 trillion of national debt, and so many other factors. We just encourage our listeners, our clients, and prospective clients to be cautiously optimistic, not to be too optimistic just yet, because we're in the middle of a recession, and there's just so much uncertainty right now.
But the folks with the big bucks say it's all good. There's nothing to worry about. You notice that?
We do, and that's unfortunate because we think there's a big disparity, a big disconnect between somebody like that on Wall Street and the actual middle American.
Right. The middle class that's worked hard and saved and invested, and there are those millionaire next doors. And that's why I say the folks with the big bucks. I'm talking about the big corporate gurus and the analysts and things like that. So what do we need to be watching out for? What should we be doing if we're near or in retirement right now?
Controlling what we can control, Kristen. So we had a listener call in actually 2 years ago, back in 2018. And, life happens and, all kinds of things get thrown at us and babies are born and people pass away and new jobs are had. And this gentleman and his wife are in the military and they obviously have moved around a good bit and they're about ready to get shipped off to another location. They couldn't even tell me where for another 2 years before they come back to the States and then plan on fully retiring. Well, they live down south on 95 in the Stafford, Fredericksburg area down there, and wanted a second opinion on their retirement plan. So they called in 2 years ago, life happened, here we are today, middle of 2020, finally connecting and talking about when they want to retire, what their goals and dreams are, what they've currently done, what they need to do between here and there to make sure they cross over the finish line as successfully as possible, and then have the retirement that they want to have.
Okay.
So as we were asking them all kinds of things to create a comprehensive, actionable retirement income plan for them, we asked them all kinds of things. And one of the most important things we asked them, Kristen, is about their risk tolerance and how they're invested, what they're using to save money in, and what types of investments they're choosing, annuities, market, real estate, bank accounts, etc. And they told me that they're conservative investors and that they haven't taken a lot of risk on and don't want to take much more risk on from here on out because they're in their mid to late 50s and they have less than 10 years before they fully retire. Well, if you're talking to us, someone that's invested very conservatively would be invested in something, would have saved money in something that perhaps can't lose anything. Right? If the markets go backwards. If you talk to a financial advisor at a big box firm, and they're talking about their conservative strategy, well, a conservative strategy to them might mean, well, Mr. Client, you can lose 10%. You won't lose 30 or probably won't lose 30, but you could lose 10 And maybe to them, that's a conservative fund or option for them, where conservative for us is full downside protection with zero chance of loss when the market goes backwards and goes down.
Okay.
So this couple told us they were conservative and that they were conservatively invested. We chose the most conservative options in all of our accounts. Well, they ended up sending over all of their account statements over, and we analyzed them and look at them. And guess what we found out?
What's that?
100% of their money in their 401ks, IRAs, brokerage statements, all of their accounts, 100% of their money is in stocks.
Hold on a second.
100%.
They thought that they were semi-conservative.
That's right. So
Wow.
when I opened up the statements, what I was expecting to see was, maybe some cash, some bonds, just more conservative stuff in there. 100% equities and stocks.
Wow, that's not conservative.
And so I'm glad that they were open for a second opinion and open to having a second opinion, because how they want to invest from here on out is certainly not how they're actually investing. So we have no idea what's going to happen this fall with the election. We have no idea when this coronavirus is going to kind of slow down and when we're going to have a vaccine. Those are things we cannot control. But this is something we can control. This couple is taking action. They're saying, hey, Abe, we want to retire in less than 10 years. We're going to go away overseas for the next 2 years. We want to work together. We want to make sure we're doing everything we can to retire successfully so we have as much fun and peace of mind in retirement as possible. What can we do? Show us where we're at and what we need to do to get there. And so this couple's doing everything right in terms of getting a second opinion and doing everything they can, controlling what they can control.
That's all we really have in life. I was actually talking to a friend about this the other day, about when you're going through something and you can't control necessarily the outcome, you have to hold to what you can control. So what I'm saying is we can't control what happens on Wall Street, but we can control how we prepare for that and how we react or don't even have to react to it.
Find out more at retirementkeyradio.com.
Financial professionals are not licensed in all 50 states. To find out if Abraham Abish is licensed in your state, please call 571-577-9968. Abish Financial Services is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Abraham Abish, NPM number 770-3575.